Hi, and welcome to Inside CalSTRS Investments, a look at how teachers' contributions are invested for the benefit of all its members. I'm here today with Geraldine Jimenez, a portfolio manager here at CalSTRS, and we're here to talk about this last fiscal year's returns, and we did pretty well.
Yes, we were really excited. 13.4, which put us a median pension fund return, so of our universe, our peers, and we beat our benchmarks, and this is always the goal. That being said, we're a long-term investor, and to pay teachers' pensions, we need long-term good returns. So the 20-year return was 6.9. Now our actuaries assume that we will have 7% over the long term. So that was good. The 10-year return was 5%, and then the 5-year return was 10.1. So as you can see, it's quite volatile. And a lot of that has to do with the equity market or the stock market returns. When it has a bad year, it definitely affects our returns.
So in terms of our investment portfolio, what types of actions have we taken to try to help smooth the portfolio out from these big ups and downs?
Yeah, that's a great question, and the board has been working on this and staff. So in 2015, the board approved a new asset allocation, and what that is that's where we put our money, so in stocks, bonds, and we introduced a new asset class called risk mitigating strategies. And the point is to protect the fund and the portfolio in those years when the stock market is really taken a dive. As you recall, 2008 was a very difficult year for almost all investors, and that include the CalSTRS fund. So we're rolling this out, and we hope to have it implemented in early 2018.
I noticed that this year, which was such a strong year, our risk mitigating strategies actually went down a little bit. Is that expected?
That's great. That's exactly what we'd expect, because it's actually protecting. It kind of moves in a different direction, if you will, than the stock market, which is intentional. We're almost, if you will, it's not exactly insurance, but if you want to call it like an insurance-like thing, it is for the equity market volatility.
Okay, well, Geraldine, thanks for joining us today. You've been watching Inside CalSTRS Investments.